Normally, when you listen to the news, you always get a bunch of financial indicators. Now, these financial indicators basically tell us what to expect in terms of pricing. When you hear that the rand is weakening against the dollar, you know that our imports are going to be very expensive. You know that maybe there's a price increase in petrol coming because the exchange rate is weakening. And if you hear the price of Brent crude oil increasing, you know for sure that definitely there's a petrol increase coming your way. But when you hear something like the price of gold is trading at $1,299 an ounce, how does that really affect you if you're not actively investing in gold? It pretty much doesn't. Well, as a precious metals investor, I don't just look at the price of gold or the price of silver. The financial indicator that really gets my attention is the gold-silver ratio. Now, this ratio basically tells me how many pieces of silver I can get from 1 ounce of gold, a 1 ounce gold coin, like a Kruger, for example. So currently, at the time of this recording the video, the gold-silver ratio was at 80:1, meaning that a 1 ounce Kruger coin will give me 80 pieces of 1 ounce silver Kruger coins. But what does that mean? Let me show you. So let's try and make sense of the gold and silver ratio. So at the time of recording this video, the gold-silver ratio was 80:1, meaning, for example, let's say this was a 1 ounce gold Kruger coin. Since it's not safe to carry around this volume of coins in South Africa, we got to keep them away in a vault. But let's assume that this was a 1 ounce Kruger, or any 1 ounce gold coin for that matter. According to this price of 80:1, it's going to take us 80 pieces of silver. What do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There we go. Let's assume that this is 10 pieces of silver. We have 8 stacks here. 80 pieces of silver can be exchanged for this 1 gold coin. All right. So I can take my 1 gold coin, take it to the exchange or any gold trader, swap my 1 ounce gold coin, and that's going to give me 80 pieces of silver. So as time goes by, the gold-silver ratio fluctuates. At one point in time, I think it was just after the Great Recession of 2018, I think it was in early 2011, silver appreciated against the dollar, meaning the gold-silver ratio strengthened, and the gold-silver ratio was around 32:1, meaning it would take three stacks of this and 2 pieces of silver for 1 gold coin. So eventually, as time goes by, let's say the gold-silver ratio increases in value. The silver increases in value and the gold-silver ratio is at 40:1. So when it's at 40:1, I'll go back to my gold trader. I'll take my 40 silver coins and I'll trade it in for 1 ounce of gold. And since I have another stack of 40, I trade this in and get 2 gold coins. And then, because everything is cyclic, when it comes to investments, time goes by and we see that the gold-silver ratio increases again. I think at its lowest point, the gold-silver ratio was at 125 pieces of silver for 1 gold coin. So when the gold-silver ratio weakens again, let's say back to 80 for 1 coin, I can go to my gold trader, take my gold coin, and buy 80 pieces of silver. Well, I have another gold coin, so I can buy another 80 pieces of silver if I needed to. And that's how you use this financial indicator of the gold-silver ratio to trade gold. And you do this over time. So if you make that one initial investment, this is how you trade gold and accumulate your wealth in terms of precious metals. Now, this is not the only financial indicator you should be looking at. There's other charts, there's other information that you need to constantly be looking at when it comes to trading precious metals. But this by far, my favorite ways, it's a real good indicator of how much undervalued silver is in comparison to gold. And that is why I choose to invest in silver rather than gold.